Good morning, everyone. It's Ben Buckner. Dan Basse is back joining us with Ag Resource Company in Chicago. We got financial markets having a little bit of a bounce today, and grain markets mixed, mostly lower, kind of struggling to push back against the recent bear trend. And I think it's all about weather, and I think the details of central U.S. weather, including 24-hour recorded rainfall totals overnight, things like that. So, crop estimates are getting large. Private yield estimates are getting large, and there's been some, dismissal of those, but the math is the math, and I think, Dan, you're going to break down just exactly what we're looking at when we think about corn reaching 50% pollination in the next, 10 days or so, what weather looks like, temperatures, rainfall, and so I'll let you break that down now.
Yeah, Ben, we've got some big reports coming out. Of course, we have the USDA on Friday. We've got CONAB, the Brazilian USDA equivalent in Brazil, coming out tomorrow. That safrinha corn crop will be the interesting report tomorrow. Most people think around 118 or 119 million metric tons. We'll see if they come out any higher than that. But it's all about corn right now. Of course, July is the month we make corn, and that's why we want to get into this update. As you look at weather, and we go back and look at percent of normal rainfall going back to June 1st, you can see that the dry areas have really been centered in Illinois and across the northern plains. So as you think about what's going on there, those are the areas that are in need of rain. The big difference, and we've been trying to highlight that in these videos, is that the plains this year are really in a good position. As you think about what has happened overnight, we did get some much needed rain across the portions of northern Missouri, southern Iowa, but it stretched all the way into Illinois, central and northern Illinois, places like Peoria, Quincy, getting some needed rainfall. So that's all been very helpful. As you think about further what's to come, the forecast maps have a lot of rain for the Dakotas, also stretching into Illinois. So starting in the next 24 hours, we're pretty confident that Illinois and points eastward will get some good moisture. The big change in the forecast this morning have been the cooling trends that have been very evident across the southern U.S. that extend now into the Midwest. So wet weather along with cooler temperatures means bigger yield. Remember, every year that we've had good to excellent ratings in the first week of July, above 70%, those yields have either been trend or above. So the worst yield we can see right now on corn is 181. The question is, how does Mother treat us going forward, and what does this really mean for yield as we look down the pipe? As we think about the corn market, it is broken to the downside. Our downside target is either the gap level there at around 82 to 85 or the contract lows that go back to last year, down in that 362 to 370 area relative to spot futures, which will soon be September. That's where we believe the corn market is going longer term. If we had a U.S. corn yield above 187 or 188, we probably would drop below 350. So please be in mind with that. As you look at the soybean market, we're still trading in that broad range. We don't know about China, but the longer time goes on and we don't have a Chinese story to say in terms of them buying U.S. new crop soybeans, that market will weaken as we get into the month of July. So month of August, corn is a July month. As we look at soybeans, it'll be key in August. When we stack it all up at Ag Resource and we look at where U.S. corn, wheat, soybean, end stocks will be, these three commodities, the pillars, if you will, of the food chain are showing that we will have the largest U.S. combined major crop stocks looking backwards to 2018. So this is the reason why grain markets are coming under pressure. Things look to the downside, and as we look forward, I believe this is going to be very important, Ben, to understand where the market needs to go to buy demand. There is one grain, if you will, or something in the Chicago Board of Trade that's doing better. It's called soybean oil. When you look at crush spreads, we are moving upwards. We believe the crush will move upwards to 220 to 240 a bushel longer term. This will include many of the major crushers to go to full capacity, which is somewhere between 94 and 96%. As you think about what the goal of the soybean oil market is to do, first of all, we need to get rid of export demand from the United States. Canada also needs to do the same thing on canola oil. This, of course, is looking at the variance between Brazilian and U.S. offers, Argentina included here. And again, we are very expensive out of the Gulf. So for practical purposes, the U.S. soybean oil export season is pretty much shut down. Within all that, we need to see capacity come back online. We had a meeting yesterday between the EPA and the RVO. It went very positively from the biofuel industry, but they were worried about the SRE, small refinery exemptions. The chart on your right here shows us that indeed crush capacity is going to be coming back in the United States. So we can look forward to maybe adding somewhere between 70 and 110 million bushels of each crush capacity each year. Now, that's not the panacea that'll get us to a bull market in global agriculture, U.S. agriculture, agriculture in particular. But as we look at the other slide here, this is capacity levels in terms of renewable diesel and biodiesel. And they are down quite low because we haven't had a subsidy with 45Z. This capacity will come back online. So, Ben, if there is a bullish commodity, it's going to be soybean oil. I don't think soybean oil falls too far below 48 or 50 cents anytime soon.
Yeah, great breakdown. And we kind of separated at Ag Resource, the veg oil markets from everything else. And I think the everything else category, just abundant supplies. We're just entertaining, again, in terms of marketing or managing risk, what is the genetic capability of the U.S. corn crop given weather to date and weather over the next 10 days? Maybe it's something we haven't seen before. So we know there's big yields that a lot of the private trade's coming out with, but it doesn't make sense mathematically. And even Illinois, it's not been wet, but even the rainfall we saw last night, if you were to overlay sort of the county level production math, those are some pretty heavily concentrated areas that got an inch of rain in the last 24 hours. So the timing of that rain looks pretty good. So the question I think to us is what kind of stops this thing? Where do we sort of pause the brake? What does buy demand? We've got to maximize, crush margins, ethanol margins, things like that. But the perception is going to be higher yields, I think, until proven otherwise. So that's going to be the driving factor. We're going to be laying out a lot of this risk, a lot of new recommendations. So $1 is all it takes to get you in for 30 days. So be sure to check that out. CONAB, USDA, by state yield estimates, things like that. So that's, I think, it. Trade deals, weather, both kind of lean bearish in the marketplace. And so, like always, all the best trading today, and we will talk tomorrow. Bye-bye.